Thangamayil Jewellery September quarter results were affected by lower than anticipated margins. The demand momentum is strong and TMJL expects good sales in the upcoming festive and wedding seasons. It is also undergoing both brownfield and greenfield store expansion. Margins in the first half of FY23 were at historic lows and we expect improvement from the current levels. We see healthy earnings growth here on for TMJL. Mandatory hallmarking regulations also provide a huge long-term growth opportunity for organized players like TMJL, given the dominance of the unorganized segment in the jewellery industry. TMJL is amongst the few listed quality stocks in the jewellery space with decent return ratios. Current valuations provide comfort and therefore we advise investors to add the stock to their portfolio. TMJL posted weak profitability in the second quarter of FY23. Revenues grew in double digits YOY, mainly driven by higher realizations on gold jewellery. Remember, gold forms about 90% of revenue for TMJL. Gold jewellery volumes were up marginally just by 1% year-on-year. Gross margins declined on a YOY basis owing to higher discounts and lower gold board rates. Higher employee expenses and other costs also hit margins. Rising interest costs and depreciation owing to store expansion further affected the profitability, leading to steep decline on a year-on-year basis. Like other jewellery players, TMJL posted robust double-digit top-line growth in September 22 quarter, despite a high base of September 2021. The company stated that with the end of COVID-related restrictions, consumer demand for jewellery is witnessing strong momentum. TMJL expects the strong growth in revenue to sustain in the second half of FY23. The company is undertaking expansion of the existing outlets by enhancing the store space and better utilization of existing store area. Recently, it relaunched 6 existing outlets, enhancing both business area as well as saleable inventory. TMJL also plans to add 4 new jewellery outlets this fiscal, taking the overall store count to 54 by the end of FY23. The mandatory hallmarking regulations require jewellery to be certified. The certification would ensure high level of purity and hence the high pricing differential between unorganized and organized players, largely owing to suboptimal level of gold purity, is likely to reduce. The government has started jewellery hallmarking in bigger cities, and with the increase in testing infrastructure, the regulation would be enforced in semi-urban and rural areas as well. The high presence of unorganized players in semi-urban and rural markets would benefit a TMJL as it is a rural-centric jewellery player. TMJL's gross margins declined to 7.6% in the first half of FY23 compared to 10-11% margin levels in FY18 to 21 period. Higher discounts and lowering of gold boarding charges are likely to offset the increase in gold price. Remember, import duty on gold was raised by about 5% from July 2022, which also affected the margins. Also, adverse mix with higher share of non-gold jewellery impacted TMJL's margins overall. Over the next few quarters, TMJL is expected to lower the discounts, leading to better pricing. Also, with improved efficiency led by higher store revenue and operating leverage, we expect TMJL's margins to improve. Its operating margins of 4.1% in the first half of FY23 are lower than the medium-term historical margin range of 5 to 6%. Now, at current market price, the stock is trading at a PE of 15 times its FY24 projected earnings, which is slightly lower than its long-term historical average. And hence, we recommend investors to add the stock to their portfolio.